Hi, my name is Anna Drabek, and my company analysis focuses on Lululemon. I am a total sucker for Lululemon's product and their brand. In fact, most of my evenings are spent wearing their yoga pants and their tops. I'm such a sucker that I've turned my entire family and friends onto the brand. Here I am hiking with my mom, wearing Lululemon from head to ankle. And because I'm an active wearer, and because I constantly hear about Lululemon in the news, I really wanted to understand how the company is doing financially, especially in the midst of all the new competition. So let's explore if Lululemon is continuing to soar or if there are potential hurdles in the way. To start off, Lululemon was founded in 1998 and is headquartered in Canada. It helped popularize the ubiquitous black yoga pants and created a surge in athleisure that we see today. Its target is middle-of-the-road consumers, and it maintains a closer, boutique feel through grassroots marketing via its ambassadors, as well as its community-oriented stores. Lululemon sells its product through online channels, as well as over 230 physical stores all over the world. Because of the low barriers to entry, there has been an incredible rise in competition. Something I found really interesting is that the activewear market is set to reach 83 billion in sales by 2020, which is a 30% jump from current figures. So I expect that we'll see a lot of other competitors sprouting up over time. Great, so now let's jump into the corporate annual report. Great little image here on the first page showcasing the notorious black Lululemon pants. Then, skimming through the report, we see page 37 has an accredited auditor's report, which states that it's using generally accepted accounting principles. Awesome. Now onto the income statement. Lululemon's net revenue is $2 billion, which is a $263.3 million jump from the previous year. A good amount of this extra revenue is due to 61 new stores opening, as well as increased warehouse and outlet sales. And just for reference, since I just pointed out some of the bigger competitors earlier, Nike has $30 billion in revenue, VF has 12.6, and Under Armour is just shy of $4 billion. I was curious if this growth has been recent or if it's been steady. So I did a little bit of digging, and we can see that Lululemon has had a pretty steady revenue growth over the last 7 years. Next up, we have gross profit, which is net revenue minus the cost of goods sold, which also increased by $83 million to $997.2 million. So far, so good. We then see the changes in gross profit margin. By doing the ratio, we get 48.4%. This is down a little bit from fiscal year 2014, where it was 50.8%. This might be due to increased fixed costs, labor cost increases, a decrease in product margins due to markdowns and discounts from their warehouses and the outlets that we mentioned. But just for industry reference, Nike's is 45%. So because Lululemon is a middle tier retailer, it actually makes sense that its margins are about 48 to 50%. After talking to Marty, I also learned that it's okay to lose a little margin as you get a little bit bigger. Finally, we see that the net income is up by $27 million. This is likely due to an $83 million increase in gross profit, which was a result of the new stores and a growth of Lululemon's online market, as well as a decrease in $41.7 million in income tax expenses. Now let's look at the balance sheet. Starting with the current ratio, which shows us how Lululemon will be able to meet its short-term debt requirements, this ratio is a little bit over 4, meaning Lululemon has 4 times the amount of cash to pay off its liabilities. For reference, Nike has 2.8. Also, Lululemon has a good amount of cash, about 38% of its total assets, whereas Nike only has 14% of it cash in relation to total assets. Another thing we see is that Lululemon has the same type of inventory turnover as a good amount of the industry. They sell a lot more in Q4 during the holidays, as other specialty retailers do, with an inventory turnover of 3.74. This is pretty close to Nike, which is 3.59. Finally, we see that Lululemon does not have very much debt, meaning it is not dependent on money borrowed from others. Remind me to get back to this point in a few with another finding that I had. They're also really good in terms of their return on their assets. The average for a middle tier retailer is 20 to 23%, and they are right on target. Nike's was 17.5% last year. And finally, the cash flow. There isn't a ton of insight here, but we do see that they spent $143 million on property and equipment, which is likely the opening of more distribution centers and IT infrastructure that could enable long-term growth. But then, when I was talking to Marty, we saw something super interesting. Lululemon repurchased $274 million of stock. Companies mainly do this if they're trying to sell. And this mirrors some of the media speculation, which mentions that Under Armour, Nike, or VF Corp might take it over. This also makes more sense as to why they're keeping so much money, so much assets in cash, and don't seem to be investing in buying new companies. They're also very healthy, so it makes sense why they would be a great company to purchase. One thing that Lululemon tries to make evident is that it's socially responsible and that it cares about its communities. So it has this entire web page as well as 10 subsequent pages dedicated to CSR. However, when I dug for CSR statistics, there were none. In fact, they haven't updated this info since 2012, which is such a shame. Lululemon kind of lost some brownie points with me. I think they have a really big opportunity to zero in on some CSR initiatives in the future. Though I do see some challenges in Lululemon's future, such as more competition, which might cause price pressures, hurdles in product innovation, and the potential trend of leggings going away. As I recently read, jeans are making a comeback, so we need to be a little bit careful of people not wearing leggings as often. But I do see a lot of opportunities for them to increase revenues by building out the men's line, investing more heavily in it, gaining more momentum internationally, and maybe creating a bit more innovation around their product. You know that they're trying to create new materials for their pants and things like that, but they're not really that innovative. And potentially building out their online business, which is only 19% of the business currently. Given Lululemon's incredible financial standing, though, I can expect to continue to see Lululemon pants in all of my boxing classes. However, I personally wouldn't mind an acquisition by someone like Nike. I think Lululemon could really benefit from the innovation, the design, and the sustainability practices, and could help the company grow while maintaining its community and boutique feel. So that's a wrap. Thanks so much for listening, and I'm really excited to see where Lululemon heads next.